traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I wanted to talk to you a little bit about the show that I did for the Money Show yesterday. It's a virtual trading thing where I was on for 2 hours, and basically I went through the PowerPoint presentations that I like, and also some of the patterns that we look at, the 135, and also, the Gartley, the butterfly, ABCD, keeping it as simple as possible. And it went pretty good. The problem was they had a pretty good crowd, but there was no questions afterwards. I had several people in there that had been following me for a long time, some not so long, and they enjoyed it very much and told me that it was fun and they learned something. However, I got 3 emails last night and early in the evening, I guess, and they were both, I think they came from the same group or the same person with different emails. I'm not sure, but they had the same tone, and that was the fact that the stuff that I was looking at was third grade material. Well, I've never said third grade material, folks. I said the 5th grade. And the reason why I spent 3 years in the 5th grade trying to figure out on ciphering. And so I am pretty good at the 5th grade math, and that's all this stuff is all about. Now, I posted the chart in there that we were looking at exactly when it happened. You can see there, that's when we were on. You can see 10 o'clock my time was when I was on the show. We were making a beautiful 135 pattern, just as perfect as could be, perfect retracements and everything. I spelled out what it had to do, and it worked great, and just was really absolutely spot on. We did 3 trades in that 2 hours. All 3 of them made really good money, well over $2,500 on the day. So that's neither here nor there. Now, why did the bell ring, for heaven's sakes? I'm hearing a bell ringing. What does that bell mean, for heaven's sakes? I don't know. Shut the front door and raise the rent. Al, does that bell mean anything? That means I have a caller, and we got Michael from Niagara Falls, but he's actually in Poland now. Michael, how are you?
Hey, thanks for taking my call there, Larry.
It's my pleasure. You want to talk about...
beat everybody else to you today. And
that's good.
I wanted to talk about the 2 stocks which I've deemed the canary in the coal mine. And they haven't really participated in the January rally. One is Johnson & Johnson, J&J.
Mm-hmm. Yes.
And the second one is Credit Suisse, ticker symbol CS.
Yeah, Credit Suisse is in the toilet, and it looks like it's swirling around, heading to go lower, is my guess. But your very interesting chart here about Johnson & Johnson. I was in the pharmaceutical business for 10 years in my early career, and it was one of the premier firms to work for. Eli Lilly, Merck, and Johnson and J&J, and they were very, very good. But boy, something's happened because they're either under mismanagement or their product line has dissipated. But as you can see, it's a much, much weaker than market stock. Even on the bottom, it wouldn't rally very much. And so I would stay away from this stock. They've got a major problem in here somewhere, so I wouldn't touch that. Credit Suisse, I'd even touch it even less.
Could you provide some projections to the downside, please?
Yes, there's an ABCD pattern that's going to take it down below $100 a share, probably around $95 is what it looks like. If you look at the big ABCD there, you got your A leg way back here in April, and you come down, you rally up, and boom, you're going to be somewhere in that 85 to 90 level would be the ABCD. There you might take a stab at it, but look for a place to sell it, Mike. That's the easy trade.
Okay.
It just doesn't bounce. Credit Suisse, that's a falling knife, pal. Stay away from that one. That's like trying to find a bottom in Deutsche Bank. I wouldn't touch Credit Suisse. They've got people leaving. They just have disarray there. And you can see it in the price of the stock. There's no bottom here. Yeah. So I wouldn't touch it.
Yeah, it gapped down today.
Yes, it's terrible.
So you wouldn't buy the dip then?
No. That dip keeps dipping and dipping. It's like natural gas, trying to find the bottom in natural gas. Someday, but not today. So no, stay away from the Credit Suisse too. There's no reason. There's too many easy ones out there. Those are the ones you want to find. Is that okay? Uh-oh, looks like we've lost our caller, Mike. And at least I know what that bell is. I thought I was in a Stallone movie when I heard that bell, Al. So thank you very much. It's a big help that I know what it is. We have so many callers coming in that when the bells come, it's like Bing Crosby singing Jingle Bells again. Anyway, let's. The tiger screaming again. Okay, let's move on here to a couple of things. Anyway, I posted that pattern in there, and the folks said, "Oh, that's third grade stuff," And so what I did today, I did the same thing. All I did was I sent this out to them before it happened, and I wasn't going to do it, but then I said, what the heck, I might as well. But I wanted to show you this was exactly to the tick, exactly what happened today. That happened yesterday. There's your 135 pattern. There's your 382 retracement. That was the E-mini S&P. And this time, the Dow Jones Industrial Average also did exactly the same thing. Now, I was using the same chart 4-minute because I was trying to find a trade in a pattern that matched up with pattern recognition swing trading. And, they not badmouth me, but they said, I don't know anything about Elliott Wave. And, they're right. I don't. I know one thing, folks. I'm Curly in City Slickers. AB equals CD. You give me AB, CD, you give me 135, I'll be there to play. You betcha. I can be there to play when they do that because that I understand. I don't have to and I don't, folks, if you think that I badmouth Elliott Wave, I do not. I don't understand it. That's all I can tell you is I don't understand it. I really don't. Now let's quick take a look at some of these stocks that are really in the news now and we need to pay attention to. The first one we're going to look at here is Amazon. And as you can see here, we've already completed the pattern in Amazon about 5 or 6 days ago. We've been following that on the way up. The ABCD pattern right there, we completed it right at the 61% retracement of the high that we made, way back in August. And so that was the one that we were watching. Also, we were looking at Mr. Appel, who's down by the well. And here again, we want to be looking at that big ABCD on the way down. You can't beat ABCD, folks. It's so simple, so easy. Look at that. Perfect ABCD. Measures to 125. The low on the stock, 124 3/4. We had a high of 56 today. 156, which is the 61% retracement. Another one hitting absolutely spot on today. We got another one that's coming up here by Mr. Google, and we want to get it up here. This was 4 days ago. Google made its target. We'll get it up here. I don't trade these folks. I bring them in because when people ask the question, that's what I've tried to show you. You can see a beautiful ABCD pattern here. It makes a 38% retracement of the high that we made way back in April of last year, okay? And guess what? There was a 61% retracement of the high we made in August. You got a double confirmation here. One's a 382, the other's a 61% retracement. It's an ABCD, and it's already down 10% from its high. And fundamentals, who knows? I'm not sure about fundamentals. And the last one, of course, is Mr. Tesla. And oh dear, what did I do with Tesla? I know I've got it in here somewhere, Tesla. You've got to be here, Tesla.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, now we're going to be taking a look here at Tesla. Folks, look at this. Stock was at 106. The ABCD measured to 109. We got to 106 on that big trashy day when they said the world was coming to an end with Mr. Musk. Don't ever fade that dude. He's one smart puppy. Anyways, you can see here we're setting right at a 382 retracement of the high going way back into last year. We're also setting at a 61% retracement of the high from the recent high that we had just a few months ago. So this is a pretty significant spot here. So we're looking at Apple, Tesla, Google, and Amazon, all of those big ones, and they're all completing, recovery patterns. So that's a sign that, by golly, we ought to pay attention to that. It may mean something, may not, but it may, and that's the main thing. That measures to 210, and we're trading at 211 and a quarter. By the way, that is the 50% retracement of the September high. The 382 of the high back in April of last year comes in at 210 also. So we're right in that zone here. And we had a nice gap up on some other good news, I guess, with Tesla. So that's another one that's acting, relatively well. Okay, now I wanted to bring to your attention a couple of little tiny things that I think are relatively important, and that is the gold market. I want to give you an idea. Here's gold, folks. We had this big run-up. As you can see here, this is just a shorter-term view of the last 4 or 5 days because we had a $100 break here from the high. You can see the ABCD pattern here. The 786 on the long-term chart. The long-term weekly was 77. It went to 1975, and by golly, from that level, it started to move down. Then we made a 382 retracement here. We backed off, and we made a nice little ABCD today at 1902, and now we're getting ready to break down some more. Folks, the thing that you want to be watching really closely, and I'm doing this for the 24/7 folks, and that is there's a really strong cluster of numbers at 1845 to 1839 in that area. I mean, I've gone through these before. I don't want to bore you with them again, but they're important. You're talking at a 382 off of the low at 1618. That's a monster right there. The problem is it came down so very, very fast. I believe that I still believe that we're going to see new highs in gold this year. And the question is if it can hold that 1840 level, I think it's got a chance. But if we break it, and remember, we're only $40 away from that right now. And if we can drop $100 in 2 days, we can make $40 in a few hours. So for heaven's sakes, if you're in there and you're going to be buying at 1840, put a $10 stop in it, because you don't know whether it's going to stop or not. You just have a group of numbers that look really interesting. And if they fail, then you've got something that you got to be really careful about. Okay, that's the main thing of looking at it. Now, I wanted to share, we just had a report here in the grain markets, and I wanted to bring you up to date here quickly on wheat, because wheat was selling for $13 a bushel here last July. Here we are 6-7 months later, and it's selling for half that price. You can see the 382 retracements all the way down, and we got another one possibly today, but right now the wheat is not responding very well. The only thing in the grain market that is up is the meal market, and it is still holding its own at that level. So it's pretty interesting to see that it's still holding that level, but not much other than that in the grain markets. There's not much else going up. Soybeans are basically unchanged. Corn and wheat are all down, and but those are the ones. And soybean oil is down considerably, but those are just the ones at the grain market. Of course, the stock markets are weak across the board. We got the S&P down 10, Dow down about 100, S&P 35 to 50. Or they're moving so fast you can't even tell them, 50 points in the NASDAQ. So it's still a little early in the day, but those are the things that we're paying close attention to here today with the this action that we're seeing here in the grain markets, and also some of the things that in the gold, and also crude oil. We need to talk just a tad about crude oil here, because it's got a very nice pattern here. We'll just get it up here, so all I can do is find it. Crude oil, where did you go, crude oil? Please help me. Please help me. Where did you go? Oh, dear. I had it right here. Doggone it. Oh, it's right here. There it is, right there in front of me. So there we go. Get it up. I have so many of these charts prepared. I probably should scale it down a little bit, but there's our 61% retracement. We hit a beautiful ABCD. The low we made so far today, folks, dropped $2.50 a barrel, almost exactly to the 382. This is incredibly important, because if we don't take this out, and that's all we get, this thing's going to go a lot higher. And whether that's going to have anything to do with what's going on in Ukraine or whatever, I don't know. I don't think it is, because, that doesn't even enter into the picture anymore. And hopefully we'll be able to get some stuff on the spy satellite stuff from our good friend Bartolone. Well, he'll be on here at the break, and he'll possibly tell us about some of the things that he's had to go through, because he had clearances, folks, that he was not quite in the bodyguard category. In other words, some of those guys that work for the Navy intelligence have their own bodyguards and their own drivers. Jim wasn't quite there, but he was really close. I can remember one time in New York, he had a little entourage with him and stuff, but that was back in the old days. Gosh, I can't believe I've known him for, it's been 28 years now. His grandkids are growing up, for heaven's sakes. Anyway, let's move on here. One other question that someone asked about is, where is the top in the market? Folks, I don't know. All I'm doing is I'm looking at the patterns, the shorter term patterns, just like I was doing today. Why do I do that? Because it tells me how much I have to risk to see if I'm right. That's really it. To being a prognosticator in these markets is difficult. And I do some of that when I see, perfect ABCD patterns everywhere. Yeah, then I'll do that. But until that time, nope, not going to happen. So those are just some of the things that, we're watching to see if we can help you along with some of these patterns. But remember, they don't always work. That's correct. But they do work. And when they do work, they give you a really good profit to loss ratio. And that's really what you're looking at. Just look at that 135 pattern yesterday in the S&P, and again in the S&P today. Exactly the same. And you know what, folks? Almost exactly at the same time. That's what's interesting. And we have a caller coming in here today, and it is Mike from, I guess that must be Florida. Mike, how are you doing today?
That's right, Ormond Beach, right near Daytona.
Okay, what can I do for you, my friend?
Yeah, Larry, I'm looking at UNG, and you made the comment today about natural gas taking off.
Yes.
And also, one of your guests, who's my favorite guest on your show, Shane Smalling, he mentioned that natural gas could be making a bottom right around this time, today or tomorrow. So I wanted your opinion on, do you think that this could be a pretty significant bottom in natural gas?
Yes, it could be, because we've made a tiny bit higher bottom than we did yesterday, which is a good sign. We've had a really good rally so far today. We rallied about 20 points, but there's a good chance, and I'll cover that tomorrow, or maybe later after we finish with Jim. Okay, Mike?
Sounds great. Thank you.
Okay, thanks for calling in. I really appreciate it. We'll be right back with Jim Bartleone, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back and we're talking with Jim Bartleone of Bart's Charts. Mr. Bartleone, how are you doing today? I hope you're there, Bart. Broadsword to Danny Boy, broadsword to Danny Boy. The chicken is in the pot, the eagle has landed. I don't seem... Hey, there you go. How you doing, cowboy? You doing all right?
I'm good. I'm doing great, Larry. Thanks. Sorry about the...
No. We're in good shape here. We're in good shape. By the way, do you remember the time we were in up in Flushing, New York? You remember our meeting we had with the Chinese folks? My grandson lives right around the corner from where we met that day. No, yeah, no, he lives up. He was in Manhattan for a while. Then when he moved out there because it was much cheaper, and it was closer to where he was working. So I thought it was really funny when I saw the address and everything. I said, "Oh my gosh, I remember, folks. We were there trying to close a deal with it was 12 zeros, $3 billion actual real money, and they went with Madoff."
Yeah, and I'll never forget it, Larry, when you said, "That's a lot of zeros."
Yes, it is. And it was certainly real money, but evidently had a lot more behind it. Hey, we're talking about Tesla here today, buddy. Do you have, by the way, do you have one of those cars that you can't hear? Or what kind of vehicle do you drive?
I don't have one, but I've been in one, Larry, and I got to tell you, they're amazing. They're incredible. Have you been in one?
The only one I was in the freeway, and it ran out of electricity. We had to push it back. No, I've been in one. I've been in one in these since it's been out, and I have to admit that it seems very comfortable and everything. But I've never trusted a car that you can't hear, and the louder it is, the more I can trust it. That's all I can tell you. You know, so you're talking to someone who drives a '68 Camaro coupe, so you know I still ride the big machine. So
I love it.
Tell us, what do you think about Tesla here?
Yeah, so I just wanted to show the readers, Larry. Or the listeners or viewers, whatever we want to call them today, whatever their pronouns are, right?
You got it.
At the time this low was coming in on Tesla, my gosh, it was getting crushed, right? And so what I'm trying to just show with these next two kind of charts is trade what you see, these power of these patterns, right? And so if you just, you can just click through the Tesla charts, it was an unbelievable setup. And then, what was really important is, a little bit of, timing. It squared out the low. So from the all-time low to that all-time high, it was 414 points. And if you just took 414 calendar days from the all-time high, which was November, you had a perfect timing point. I think it actually hit 2 days afterwards. But it was so bearish, and people were going crazy. Yeah. And next thing you know, it was perfect. Price equals time, and off it went. So these patterns are so powerful. And then you look at just like what you taught me 20 years ago, measured moves. They repeat over and over and over again. So here's Tesla. It's coming up to some resistance, but if you want to go to the last chart. I tell people I love Elliott Wave when it works. And I tell people, I said, look,
you're not going to get me to, I'm not even going to make a comment because I did that yesterday and I had people throwing vegetables at me. So go ahead, buddy.
I'm sorry I mentioned it on your show, right? But
no, that's okay.
I tell people my Elliott Wave, I taught it as a CMTI, as an instructor and everything. But the bottom line is, I said, if you ask me what my golf score was and I come back immediately, give me a 5 on that 3. Okay, they'll make sense. But if I turn around and I'm on a par 5 and I start counting my holes and I say 8 or 5, that means I don't know what I got. So if I have to go a subwave lower than anything else, it's probably a wrong count. But I took some time and did this count, and I'm like, holy smokes, Tesla could be going to new highs. So hopefully we'll hit some resistance and we'll get a nice pullback. And my gosh, if we get a Gartley buy on Tesla, we got to take it. And we got to put into our mindset that this thing could go to new highs. So I put Tesla in there just to show that this is a great setup, number one. But number two, trade what you see. It was insanely bad, right? While this buy came in on Tesla. But it was a perfect ABCD. So these patterns work, right? So that was Tesla. Anything on that?
No, that's really good. And well, I tell you one thing. I don't think it's smart to fade Mr. Musk. He seems to be a pretty smart dude with his SpaceX and all the other things. Everything he's done is turned into gold. So he might fade. It's just like trying to fade Mr. Jobs. So I don't want anything to do with that, near as I can tell. Let's take a look at this next one here, which is, I believe, hold on. Next one is Pfizer. Just give me a second, Jim, so that I can get it up here. And
I can see it.
You can see it. Okay, there you go. Let's go with it. Yeah, we're ready to go.
So, again, Larry, I just wanted to show peeps, during the pandemic, that was the target, right? Way up there. And Pfizer should be making billions of dollars off of their viruses. I'm not going to make any comment on the efficacy of it or anything. But, all we know is we had this target. And then if you go to the next chart, Larry, it hit perfectly, right? So it's incredible. These patterns are incredible. Long before we got there, we had a big target, right? And I think it went maybe $1 or maybe less than $1 through it. And then when you look at Pfizer now, it's got 2 ABCDs right on a 0.618 around $42. Holy smokes. Pfizer, if it's going to make a move, it's going to hold support there, or it's going to break through and we got a short there. I know nothing about where they are.
Well, I have a question. Is this a possible precursor of COVID number 26 coming up or something like that? Or,
It certainly could be, right? Yeah. Right? You never know. But again, I'm just showing the patterns. Who in their right mind would think of shorting Pfizer? Well, if you think, you probably won't. But if you see a massive ABCD, 2 ABCDs, and a 127 on a monthly, you got to, whatever it is. So I just wanted to show that too.
Yeah, that's a really neat one here. Now, you also have a question from a personal point of view here. That we're going to take a look here at the monthly price of Pfizer here. Let's get this up here so that we can take a quick look at this. And then I wanted to ask you a question about this Chinese spy thing that's been going on. Are you able to talk to us about anything like that, or do you know anything about it that you can share?
If you can see my video, no, I know nothing about it. As I nod my head. What I can tell you. I see
nothing. I know nothing. I hear nothing. Yes, I heard that before.
No, right. Sergeant Schultz, right?
That's right.
Boy, Larry, it's not what you see. That's all I can say.
Yeah.
Right.
Yeah.
A lot's going to come out, and it's not good. I'm just telling you.
Bart, we have a question for. Is any of this stuff that we hear about, that the pipeline that was blown up, that Nord Stream 2 or 3 or whatever it was, that blowing up, and then this spy satellite, is any of this stuff leading to WW3?
Do you really want me to answer that question, or you just want me to say no?
Listen, I respect your opinion, however wrong it may be, Mr. Lincoln, but go ahead, tell me what you think.
Like my other grade counts, right? Larry, it's a high probability bet that we're already at World War III.
Really? Wow.
People just don't understand.
Can I ask a question? What would be a trigger mechanism? The airplanes being delivered to the Ukraine or something like that? Or it'll probably all start through Russia, I would imagine. They'll blame them for everything, would be my guess. But do you see something in the cards that might trigger this whole thing?
I think that once the winter thaws, that this spring, it's going to get really ugly, right?
Okay. Hey, listen, that's enough. I don't want to bother you anymore with that stuff. Let's talk about markets. We'll come back. We got some more with Jim Bartolioni, and we'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we are chatting with Jim Bartleone of Bart's Charts, and we're going to be talking about the NASDAQ Banking Index.
Yes, sir. Larry, banks lead us up, banks lead us down. A lot of bullish sentiment out there. We're the banks, right? So we're at a really, really, really important Gartley sell pattern, right? I mean, it's right there. ABCD 382 127 all on top of each other. So the bank's got to participate if this is a real rally, right? And this is huge. So if this thing fails, gaps higher and goes, then all right, we might get some more love in the equity market. But for now, I'm watching this like a hawk because the banks participate and they bring us up and bring us down. And the other thing too is note, again, I threw some Elliott wave stuff on there, but pretty no-brainer 5-wave count, right? So we're sitting on a 5-wave count, and now we have a 382 ABCD and a 127 with the banks have hardly participated in this rally. I don't think that's necessarily bullish. So I'm ready to go long and get really bullish, but there's patterns everywhere that haven't failed yet and are saying you might want to, a pullback at least, but I don't know. Maybe we have another leg lower coming. So the banks are a big deal. If you want to show the next one.
What I want to do now is I want to put the microscope on this to show the folks what you were looking at, because this is the one that's really quite clear. You can see that beautiful Gartley pattern, ABCD, right at a 382. And boy, that is not a bullish pattern. I mean, that's pretty bearish. Yeah, no. It's it could be. If it explodes out of here with some good news, or maybe Credit Suisse determines. I don't know. That stock just keeps going lower. But reminds me of Citigroup about 15 years ago. Just kept dropping and dropping and dropping, and then they reverse split 20-1 to make it look better, and it's still going down.
Right.
So
that's right.
But that's
I wanted to. Look at that. They haven't participated, Larry. If they had, they'd be all the way up at that 130, 135 level, right? They're barely pausing and delaying here at this 382. So keep an eye on the banks for sure.
Hey, that's for sure. Listen, my friend, we're going to have you on again soon, and thanks for joining us, buddy. It's always
awesome.
a pleasure to have you on. Yeah, you bet.
Thanks, guys.
Hey, Bart, how do the folks reach you to see some of the stuff that you post daily?
Absolutely.
That would be good.
Please go to bartscharts.com. bartscharts.com. I post probably about 2 or 3 times a week, and I love doing it.
Okay.
So thanks, Larry.
Yeah, keep that surfboard up, buddy.
Stay happy,
JJ
man.
said hello.
Absolutely. Hey, he's balling big time. Really good.
Yeah, I know. What is he, 6'5" now?
6'5", yeah.
Oh, my God.
No, he's doing great. Awesome, Larry. I'll tell him you said hi.
Hey, listen, take it easy, folks, and we'll have Jim Bartleone back here in a couple of weeks. And we're going to take a little bit of questions here that someone asked about one of the things that we had talked about earlier this morning, and that was about Disney. And I wanted to bring Disney up here because I wanted to show you the chart. This is a stock that's been hit really badly, but one of the things I wanted to mention, when Mr. Iger took over, which was back here on January the 4th or somewhere around that time, this is when, whatever it was, back in here, November, I think it was November, you can see the stock was in the sewer. It's up 29%, folks, since he's taken over. And all we're doing is we were watching the ABCD patterns coming down. The 382, even with that, is still way up in the air. So all of these stocks are still, heading lower. I mean, none of them are acting like it's going to be anything other than, bear market rallies. If we look at Disney here on a daily basis, you'll see where we stand right now as we're trading today. We're sitting right at a major 382 and also a 61% retracement of the high that we made back here when we had the gap up and then left the island reversal. So we're at a major level here in the Disney, but it's getting a lot of play today, even in a down market. It's still going higher, so that could be a very positive thing to pay attention to also. So these are things that you need to be asking yourselves is, why are they doing so well? And that's the main thing that you want to be paying attention to, folks. That's the key to watching some of these things. It's not how much money you make, it's how much money you don't lose, and therein lies the rub. That's the key to what we're doing. That's why simplicity beats complexity, folks. I tried to share that with the folks at the Money Show yesterday. It didn't work as well as I wanted, but by golly, it was still a lot of fun doing the show. I was doing those shows 25 years ago, folks, when they first started, and I enjoyed them ever since. I quit doing them full time. I do them off and on now. They always ask me to go, and I appreciate them. I know they're asking me, and they probably don't want to have the old man up there, but I enjoy it, still seeing some of the friends that I've had through the years with those. In fact, it's where I met Tom O'Brien in 2001 in New York after the one that it was 2002. It was 9/11 and then 9/12, which was the next, the fall of that year, the winter of that year. After the September thing, it happened in February. They expected to cancel the thing because no one was going to show up, and it was the busiest. I mean, it's still never. The records have still not been surpassed of the people that showed up to go to the financial show for the Money Show way back then, and that's where I met the boys from TFNN, which I still have a great deal of respect for and working with them all the time. Now, I want to talk to you just about the euro, folks, about frustration index. And this is one of them that just literally I kept trying. I was within about 10 pips, and this has been really good to us, folks. You can see, we were really bearish up there at 102, right? Okay, excuse me, 110. And from 110, we went down to 106. That was a $3,500 move. Look at the 382 retracements, okay, all the way down. And then we had a beautiful 382 retracement today. It missed us by 15 pips, and then it sold off and is really starting to drop more and more as we come down into it today. So those are just a few of the things that we're looking at here today, but it was a little frustrating. Of course, we was frustrated about the gold, and that happens. You have those, but it's not the end of the world. There's always going to be another pattern coming along, and that's what you really want to be focusing on, is to find out the ones that you can trade without risking very much. That's the key to what we're watching in here. That's the main thing of what we're looking at. So that's just a couple things. I'll get back to natural gas here. I want to end it with this. You'll see here this morning, and this is what we were watching this morning, and the market reversed just like we had hoped. You'll get up here, and you'll see we had the 50% retracement right here. There was your 382, your 50%. We came all the way down here, and folks, we finally started to turn, because right here at this bottom was the 135 pattern right there. And it's that simple. I mean, you don't have to be a rocket scientist, but that was the 135 pattern coming in right there. 78% of this number, 61% of that number. You can see the distance between the A's and B's are all lined up right in here. And that's what that 135 pattern is, folks. It's a market slayer, as they say in the trade, boys and girls. It's a market slayer. So we'll be right back after we pay a few bills here. We got about 34 seconds. If you want to call in, it's 877-927-6648. We'll be happy to answer any questions that we can for you. So stay tuned, and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I want to end the program here by looking at the Russell chart. As you can see, the ABCD that we had around 2200. We backed off quite a bit from there. We're already at the 382 of the previous low. So it's got to hold support right in here. Remember, we did not exceed the 78% level in the S&P. We did in the Dow Jones for a moment during the Federal Reserve meeting, or the speech with Chairman Powell. And basically what we're looking at here is a market that has completed a major ABCD. You can see the beautiful, 135 pattern that we had right here. There was your 78% level. And if we get the same type of a move to the downside, that's going to bring us down into this level right here, which is going to be a 61% retracement. And it's still in a bullish market. So you want to be watching it. The thing that's going to be concerned about is the chart that Bart just showed us, is that 382 on the banking stocks for the NASDAQ. That is one bearish puppy. That's really negative. So keep that one in mind, because we're going to update that one for sure, because that works really negative. And we want to follow it closely because, banking moves the money, and that's it. What was that? One of the things it says, why Willie Sutton robbed banks? And he said, that's where the money is. So that's why we're looking at it. And that's why we trade the foreign exchange markets, folks. They're the easiest one to trade. The Federal Reserve can do a lot of things, but they can't mess around in those markets because they're too big. They're $1 trillion $10 just in a euro itself. Anyway, we're going to have tomorrow a special on psychology of trading, a la Mark Douglas. And we're going to spend a lot of time going over the things that Mark taught me during the 6 years we worked together here in Tucson and became extremely close friends. And I think you're going to enjoy it. I enjoy it. I keep the manual right here on my desk because it reminds me that I don't know diddly squat about these markets. And the only thing I have working for me is A, B, C, D, and when I'm wrong. And that's what I need, folks. Keep it simple. Live every day in an attitude of gratitude, and may God bless.